late night, ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, Bermuda, so focus. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to do a macro update, take a look at different indices as well as some numbers that I'm watching, and kind of talk about the general outlook for the macroeconomic side of things. So we're going to get into a whole bunch of different things here, a bunch of information and charts. So without further ado, we're just going to jump into the chart here. So taking a look at the S&P, that's going to be one of our major stock market indices that we follow. We see losing its macro trend here. So there's a few trend lines I am watching, but we are losing the first trend line. So we see acting as support back to 2023 as well in here through 2024. We have lost it here. You do see we tried to bounce back above, got rejected, continued that downtrend price action. We see our 50-day curling over towards that 200-day, also indicative of that macro downtrend. So something we're really watching, because if we start to see more and more of these stock market indices really breaking down and losing those trends, it kind of indicates a lot of uncertainty in the market. You know, I do think there is a lot of uncertainty due to the continued escalation of tariffs. It could also indicate profit taking. So we saw obviously at all-time highs up here, a lot of people probably taking profits. You know, we took profits up here, we took profits on Bitcoin around 97 to 100,000 when we recognized those weaknesses, and we avoided that major dump in the market. So now we're just following along, waiting for that confirmation of trend before we re-enter, because we're just as likely to bounce up in here, get rejected by this resistance, and then continue the downtrend. So, you know, even though we're bouncing from this level, you know, we can't take it to the bank yet. We want to make sure we get that higher low, higher high, higher low confirmation backed by our indicators, and then we can continue moving to the upside. So we do see here we are kind of losing, so the bearish momentum slowing down a little bit, RSI curling up, MACD curling up. So we could experience, again, when I say a little bit of a temporary relief, it's going to really be important what happens from here. So we're either going to bounce up, kind of get rejected by that resistance, and then we're ultimately due to hit that trend line down there, you know, or we could even bounce up here, you know, break above and kind of, or even if we don't break above, you know, maybe we get up here, we put in that higher low, we put in the higher high, a subsequent higher low, and then we can continue that uptrend to the upside. So we're still waiting for that confirmation. You know, we don't really take positions without confirmation because we might get caught on the wrong side of a downtrend. You know, we're about 10% off the highs of the S&P, so it's a decent opportunity to dollar cost average, but you also have to recognize if you were to buy today, we don't have confirmation of trend, we could continue to the downside, and you need to be ready to take advantage of those lower targets. The momentum indicators on the daily looking pretty good for at least a bit of a relief bounce, but we're watching this resistance level up here. So we do see that markets may be reacting to mixed economic signals or waiting for catalysts like the central bank moves or geopolitical developments. So either de-escalation of the tariffs, maybe some favorable policy from the Fed, but still most people just kind of sitting on their hands waiting again for that confirmation. We can see the NASDAQ here also breaking that kind of short-term trend line, a similar momentum indicator setup. So we'll do see it's kind of going to look pretty similar across the board actually in terms of the three, but we see this trend line dating back to 2023, support, and we broke it here. So our next trend line that we're looking at coming up through here at kind of this level is going to be a potential if we see that broad market breakdown, moving averages stacked kind of bearishly. Flipping over to the Dow Jones, also that similar setup, so just losing these trends right below the 200-day moving average. So the NASDAQ looks a little bit stronger than the NASDAQ and the SPY look pretty similar. The Dow Jones looks a little bit weaker, way below that 200-day. And yeah, definitive downtrend price action. So we're just going to continue following these. We want to be sure that we're getting that trend reversal price action before we're entering positions. Taking a look, gold, silver, and copper all at elevated levels. So this again kind of supplements that risk off environment. The fact that copper's at pretty elevated levels is might be due to a bit of industrial demand kind of around the use of semiconductors in terms of chip development, AI. So So we could see copper kind of with a bit more demand remaining elevated, but gold at all-time highs and silver in this uptrend right now. That's indicative of a risk-off environment as well. When you factor in the fact that Bitcoin's come down, the SPY's come down, gold and silver are elevated, that just further tells me, markets are kind of, they don't know, they're preparing for a potential risk-off environment, but they haven't fully kind of committed to that kind of theory. So where we everyone's sitting on their hands waiting for that catalyst or that confirmation to tell us which way the market is likely to go from there. So we can also take a look at TLT. This is one we do have a position in. It's currently trending up on the daily chart here, holding above that 50-day moving average. So if we can get above the 200-day and the 50-day, holding it as support, that's going to look really good for TLT continuing up. This is another risk-off asset. So when we start to see the US 10-year coming down, so right through here, we basically see the interest rates get raised down here into kind of like near really low rates, and then we pumped up to that almost terminal rate, and we've just broken back down below. So we see the US 10-year breaking down, and we see TLT going up. Essentially, we're seeing that flight of capital from corporate bonds to US Treasuries for that safe haven government debt. Basically, it's a sign of risk-off sentiment, so that kind of supports that thesis as well. We take a look at the dollar here. The dollar essentially also breaking down in that downtrend. We see that bearish setup of the moving averages, but we did come into high time frame technical support here in this Fibonacci golden zone, so we could be due for a bit of a relief bounce. If we see a bounce in the dollar, it's going to put pressure on our risk-on assets, so things like the stock market, Bitcoin, crypto, tech stocks, they're all going to feel a little bit of pressure. We could just bounce back up. We're going to have to watch to see how it reacts with the 200-day, as well as the kind of this resistance zone up through here. We might experience like a bit of a relief pump in the dollar, get rejected, and continue our downtrend, ultimately looking for those lows similar to what we saw in through here. That's kind of my target for the dollar. Or we could also see that just uptrend structure form from here. So we really don't know what's going to happen. That's why I say wait for that confirmation, follow the trend, and then we just the trend is our friend until the end. It's a nice little saying you can remember there. So dollar breaking down, essentially falling treasury yields, rising safe haven assets like gold, reflects looser Federal Reserve policy. So we are seeing rate cuts, but at the same time, they don't really have the economic data that's necessary to demand another rate cut in the near term. We could just be due for them to hold steady in the next meeting. That's going to be really important. So we'll see what happens, what the Fed says next week in their FOMC, and then going forward, we'll be able to get a little more clarity. So we also see oil's at quite a low here. We see demand pretty low for oil. Basically, it could be due to oversupply, could be due to weakening global demand. It kind of contrasts with the elevated copper, suggests that energy-specific factors are at play rather than kind of a broad industrial collapse. So we'll just continue following along with that. We'll take a look at natural gas. Natural gas is doing very well. It's in this uptrend here, holding the 50-day above that. It's got the 200-day stacked up here. So rising nat gas prices could essentially reflect seasonal demand. So a lot more heating necessary in the winter. We're kind of winding down in terms of the winter. We're getting into spring, so we might be due for a bit of a breakdown in natural gas as we kind of get to those warmer temperatures. That being said, then we'll get back into the summer seasons where people are going to really need to start heating their homes with air conditioning, so we might see it resurge then as well. And then, so basically what we're getting is a bunch of mixed economic signals here. Essentially, all we see is, yeah, we're getting mixed economic symbols. So we have a combination of falling yields. We've got a weaker dollar. We've got elevated safe haven assets like gold, TLT, silver. We see, so that's essentially telling me that the markets are starting to position themselves kind of defensively. That's kind of what I have done by hedging. So I'm about half in the market, half in cash, recognizing the risks in the market as well as recognizing the opportunities in the market, because we could just bounce from here, put in that bottom kind of trend reversal structure, and then continue to the upside. But without confirmation, we're not really interested in taking any positions, just still waiting in that sit and wait, see what's going to happen. So copper's strength and nat gas uptrend can kind of suggest pockets of resilience within the industrial and energy demand, despite the fact that oil is pretty low. We do see kind of risk off sentiment is really starting to take over. The stock market indecision paired with treasury and gold strength indicates investors are hedging against downside risks, possibly a recession, geopolitical instability, or a policy misstep. So all possible possibilities in my opinion. Geopolitical instability like the tariffs leading to recessionary forces, or the Fed essentially using lagging data so they're not able to actively kind of make decisions based on real-time data, so they're often too quick or too late to hike or cut or hike rates. So it's another thing we need to pay attention to. We've got the inflation versus deflation. So gold and silver's elevation can kind of reflect lingering inflation worries. We do see there was some expectations of inflation ticking up again, but we see falling oil, falling yields, and a weaker dollar are kind of leaning towards the deflationary pressures, or at least a cooling economy. So the market's kind of torn between these two narratives. For assets to appreciate, inflation actually kind of helps it in a sense. That being said, inflation's not good for any consumer or an investor. If you're trying to save money to put into the market, you don't want to be spending more money on all the things you need to buy. We also see energy divergence here. So oil's weakness, nat gas strength, basically that split in the energy markets tied to kind of the supply dynamics or shifting usage patterns. So basically this could signal a transitional phase in the markets. They're essentially digesting the prior trends. We had that post-election optimism. It's starting to fade. We see U.S. consumer sentiment hitting a 2-year low. We see a lack of macro trends in stock markets, kind of reflecting that wait and see narrative ahead of key data releases or policy shifts. And we see the global factors like trade policies, tariffs could muddy the waters, especially with commodities showing kind of divergent paths. So I just want to flip over, show you a few more charts here. We'll take a look. Obviously, I've shown you guys the treasury yield spread before. This is a recessionary signal when we start to see things really uninvert here. So basically, we go in our inversion, and we see the price really likes it, climbing up, risk assets doing well. We uninverted here, and that essentially kind of marked right around the top. We went in a bit of a downtrend. We did invert a little bit more, but we're starting to lose that momentum. So if we zoom in here, right there, we do see we are trying to start to trend back up towards that inversion. So typically looking at prior examples of this, every time we have durably invert or uninverted in this metric, it has signaled a recession. So we need to pay attention to this. We have technically kind of uninverted and then reinverted, and then so we're just waiting. It looks like we're trending back towards the uninversion. So this is a warning signal we need to pay attention to. We see U.S. index of consumer sentiment trending down, kind of at the lowest levels since back in 2023. So consumer sentiment trending down. We see the treasury yield spread kind of signaling a little warning there. We see the U.S. ISM manufacturing PMI also trending down from this peak here. So anything above 50 essentially means that the economy is growing, and anything below is contracting, a little bit more worrisome. And then we also see U.S. retail sales trending down over the past couple months. So just different worrying economic factors. The charts are one thing. We do have to pay attention to them, but the charts move in a way that kind of reflects the market's digestion of all these different metrics here. The reason I do like charts is it's just a visualization of kind of different buys and sells. So the reason when I talk about support and resistance, it just means there's been a lot of price action in through there, a lot of people buying at those levels or selling at those levels. Human psychology is a major part of investing, so we really it's a good way to visualize how humans are trading these assets and where the levels are that are very interesting, where we can take advantage of them. But for now, nothing too much happening. We are losing some trends. We do have some warning signals. A lot of different divergences in certain metrics. That's kind of just showing us there's a lot of uncertainty in the market. So we're in that wait and see, sit on our hands, let the charts tell us when it's ready to bottom and reverse. And then we're going to be here to enter on those confirmations and ride the trend to the next level. So thank you so much for watching. If you like the content, please like, share, subscribe. It all means the world to me. And I'll see you guys in the next one.